It feels like Bitcoin is just everywhere these days, doesn't it? So much buzz.
It really is. Hard to avoid.
Yeah, and if you're just, starting to look into it, maybe feeling a bit curious, it can seem, well, pretty complex, right?
Oh, definitely. There's a lot of jargon, a lot of noise out there.
Exactly. So, this deep dive, we're aiming this squarely at you if you're that curious newcomer. We want to help you get a solid handle on what Bitcoin actually is without needing a PhD in computer science.
That's the plan. We'll look at some analysis, how its market seems to work, a bit of the history, and even how some of the more experienced folks approach it.
Think of it as your shortcut to the basics.
A straightforward guide, yeah.
So our goal today, pretty simple, really. Just a clear, easy to understand look at Bitcoin and some of the main things that seem to make it tick, especially if you're new to all this.
Sounds good.
Okay, let's dive in then. Where do we even start? What's the absolute core idea we need to get?
Well, a lot of the discussion, especially looking back, revolves around these recurring 4-year cycles people talk about.
4-year cycles.
And right at the heart of that cycle is something called the Bitcoin halving, or halving events technically.
Halving. Okay, that sounds important, but maybe a bit technical. Can you break that down simply?
Sure. So imagine Bitcoin is being created, like digital gold being mined. Roughly every 4 years, the amount of new Bitcoin created each batch, it gets cut exactly in half.
Cut in half, just like that.
Yep, programmed right into the system. So think of it like turning down the tap. The flow of new Bitcoin entering the market slows down by 50% each time this happens.
Okay, turning down the tap. I get that analogy. Less new Bitcoin being made. So why does that matter so much?
Well, this gets to the core idea of scarcity.
Right.
Unlike, say, regular money, where a central bank can decide to print more.
Yeah, like we've seen happen.
Exactly. With Bitcoin, there's a hard limit. A fixed total supply that will ever exist. It's built in. So this halving, by slowing the creation rate, it reinforces that scarcity over time.
Okay. Scarcity. And basic economics tells us if something's scarce and people still want it,
then the value can potentially increase, yeah. If demand stays the same or grows while the new supply is shrinking, that tends to put upward pressure on the price.
Makes sense.
And historically, if you look back, we've often seen these big price run-ups, bull markets, happen in the years following a halving.
Really? Is there a pattern?
Well, the pattern that often gets pointed out is something like 3 years of general upward trend, the bull market, and then maybe about 1 year of a downturn, the bear market, and kind of resetting before the next cycle potentially starts.
3 years up, 1 year down. Interesting. So Bitcoin wild price swings aren't just completely random chaos.
Well, maybe not completely random. The history definitely shows massive fluctuations, ups and downs for sure. But they often seem linked to these cyclical things, especially the halvings we're talking about.
Okay.
Like sometimes leading up to a halving, you might see the price rise as people anticipate that supply cut, but then sometimes you get corrections too. Price dips before things potentially settle and maybe move up again afterwards.
So it's not like a guaranteed price jump the day after the halving happened?
Oh, definitely not. It's more complex than that. And something else that's really important to mention, the whole landscape is kind of changing now.
How so?
Well, sources point to way more involvement from big players now, institutional investors like hedge funds, big companies.
Right, you hear about that more.
Yeah, and there's this growing narrative, this idea of Bitcoin maybe being a hedge against inflation, like digital gold. Some analysts think these newer forces might actually start to blur those neat 4-year cycle lines we saw in the past.
Okay. So bigger investors with maybe different goals than early adopters?
Exactly. They might have longer time horizons, bigger pools of money. It could potentially smooth out some of the really extreme ups and downs we saw before. Maybe more gradual growth, maybe less dramatic crashes. It's something people are watching closely.
So the halving is still super important, a core mechanism, but it's not the only thing driving the bus anymore.
You got it. It's a key piece, that built-in supply reduction. That scarcity element, some argue, can really, pour fuel on the fire when demand picks up. It's fundamental to the design.
Okay, I think I'm wrapping my head around the halving and the scarcity part. But you mentioned other factors. What else should someone new to this be aware of that can push the price around?
Right, so Bitcoin doesn't exist in a vacuum, obviously. Think about the wider world. Big economic policies, what governments and central banks are doing. That matters.
Like interest rates and stuff.
Yeah, exactly. And regulations too. New rules about crypto, how it's treated legally or for tax purposes.
Yeah.
That could have a huge impact.
I bet uncertainty there could make people nervous.
for sure. And just, the general mood in the global financial markets, if everything's looking shaky, sometimes that affects Bitcoin too, though sometimes it moves differently. These big external things can definitely influence Bitcoin's price, maybe even disrupt those cycle patterns we talked about.
That makes total sense. It's connected to everything else.
And then there's adoption, just more people using it, more companies accepting it or investing in it.
Mainstream acceptance, kind of.
Yeah, exactly. We're seeing more of that, both individuals and those big institutions we mentioned. That's a newer dynamic too, and it definitely shapes how people feel about Bitcoin, the overall sentiment. I mean, the sources mentioned Bitcoin hitting over $70,000 after the 2020 halving.
Wow, 70,000.
Yeah, that shows you the kind of price action that can happen when these different factors line up.
Okay, whoa. So, given all this, the halving, the cycles may be blurring, institutions, regulations.
Yeah.
It sounds pretty complex to navigate. How do the experienced investors actually handle this? What are the strategies?
That's a great question, because it can be a really volatile market. One key thing you see successful long-term people do is diversification. Pretty standard investing advice, actually.
Don't put all your eggs in one basket, basically.
Exactly that. Spreading investments across different cryptocurrencies, maybe even outside crypto into other assets like stocks or bonds. It's just basic risk management.
Makes sense.
Well, there's the idea of market timing.
Yeah.
Trying to buy low and sell high.
The holy grail. Easy to say, hard to do.
Very hard to do consistently, yeah. It requires watching the market constantly, trying to analyze historical price charts and patterns. It's definitely an active approach and not without risks.
Sounds like it could be stressful.
It can be. That's why understanding those market cycles, even if they're evolving, is still something people look at. They watch for what they call accumulation phases.
Accumulation, like gathering.
Yeah, periods where the price seems to have settled down after a drop, maybe moving sideways at a lower level. Some see those as potential opportunities to buy, thinking the price might go up later.
Okay, looking for those calmer periods.
And always risk management. We mentioned diversification. Another tool is setting stop-loss orders.
Stop loss. You mentioned that. Can you just quickly explain what that is again?
Sure. It's basically an automatic instruction you give your exchange. Like, if the price of Bitcoin drops to X amount, sell my position automatically. It's a way to try and limit your potential losses if the market turns against you quickly.
Like a safety net.
Kind of, yeah. A preset exit plan for the downside. And some investors also use stablecoins.
Stablecoins. Those are the ones pegged to regular money, right? Like the dollar.
Exactly. So during times when the market feels really uncertain or choppy, some investors might move some of their capital into stablecoins to sort of sit on the sidelines and preserve their capital value before deciding on their next move.
Interesting. So park your money somewhere less volatile for a bit.
Yeah. And finally, just staying informed, keeping up with regulations, market news, new trends, and being willing to adapt your strategy. The space changes fast.
Okay, so it's a real mix. Understand the basics, watch the market, manage your risk carefully, and stay flexible. Got it. Now, if someone's getting more interested, maybe wants to start looking at the market themselves, are there specific tools or like data points they can check out?
Oh yeah, absolutely. For people who want to dig a bit deeper, there are definitely tools. One area is called on-chain metrics.
On-chain, meaning on the Bitcoin network itself.
Exactly. Analyzing the data that's publicly recorded on the Bitcoin blockchain. For instance, you can look at how much Bitcoin is flowing into cryptocurrency exchanges versus how much is flowing out.
And what does that tell you?
Well, the general idea is if lots of Bitcoin is moving off exchanges into private wallets,
People are taking it offline to keep it.
yeah, it might suggest they're planning to hold it long term, which is often seen as a bullish or positive sign. Conversely, if a lot flows onto exchanges, it might mean people are getting ready to sell.
Okay. Like tracking inventory to gauge sentiment.
That's a good way to put it, yeah. It gives clues about what other investors might be doing.
Cool. What else?
Then there's technical analysis. This is more about looking at price charts and using mathematical indicators to try and spot patterns or predict future movements.
Like reading tea leaves, but with charts.
Well, some might say that.
Uh-huh.
But there are established tools, things like the Relative Strength Index, or RSI. It helps gauge if Bitcoin is potentially overbought.
Meaning the price went up too fast, maybe due for a drop.
Correct. Or oversold, meaning it dropped maybe too much and could be due for a bounce back. There are also moving averages, which smooth out the price data to show the general trend direction over time.
Okay, so chart patterns and indicators.
And one more, market sentiment analysis. This is less about charts and more about trying to measure the overall mood or feeling about Bitcoin in the market.
How do you measure a mood?
Well, you can look at things like Google search trends for Bitcoin. Are more people searching for it? What's the tone of news coverage and social media chatter? Is it mostly positive and excited or negative and fearful?
Ah, so trying to gauge the crowd psychology.
Pretty much. High public interest in positive news can sometimes correlate with price increases and vice versa, but it can also signal hype.
Right. Okay, so on-chain data, chart analysis, and sentiment. Lots of tools for the toolbox if you want to go deeper. Now, you mentioned earlier that the cycles are maybe blurring, and our sources touch on criticisms too. What's the word of caution here for a newcomer?
Yeah, this is super important. Don't just blindly assume that 4-year cycle will repeat exactly like clockwork. Today's market is, well, way more complex. So many different things influence it now.
The institutions, global economy,
Yeah,
all that stuff.
all that stuff. And the lines between a clear bull market and a clear bear market, they're getting fuzzier. According to some analysts, it's not always as obvious anymore.
So maybe don't bet the farm based only on where we are in the supposed cycle.
Definitely not. And be really aware of media hype and social media noise. Bad news can obviously hurt the price, but sometimes excessive hype during big run-ups can lead people to make rash decisions, FOMO, fear of missing out.
Yeah, chasing the price up.
Right. Always try to do your own research, understand why you're investing if you choose to, and just remember, no crystal ball exists. No market timing strategy is perfect. The market can surprise everyone, so being adaptable is key.
That's really solid advice. Be critical, be careful, be adaptable. Okay, let's try and wrap this up for someone new listening. What are the absolute key takeaways they should hold on to from this deep dive?
Okay, key things for a newcomer. First, Bitcoin's got this unique supply system with the halving events about every 4 years, making new coins scarcer over time.
The supply squeeze. Got it.
Second, historically, this has been linked to a roughly 4-year market cycle. But that pattern seems to be changing or evolving now because of new factors like big institutions getting involved and Bitcoin's potential role against inflation.
So history is a guide, not a guarantee.
Well put. And third, experienced investors tend to use strategies like diversification, understanding market trends, managing risk carefully, maybe using tools like stop losses or stable coins.
Sensible investing principles, basically.
Yeah, and there are tools like on-chain analysis and technical charts if you want to understand market movements better, but approach them with, healthy skepticism.
Okay, so hopefully if you've been listening, this gives you a much clearer picture, maybe makes Bitcoin feel a little less intimidating than before.
That's the hope, a solid foundation to start from.
Definitely. So maybe here's a final thought to leave you with. Considering all this new institutional money flowing in and how our global economy keeps shifting, how might Bitcoin's future cycles look different from its past? What could that mean if you're thinking about it for the long haul?
Yeah, that's the big question everyone's watching now. How does this next chapter unfold?
Something to ponder as you continue learning more.